Hi traders, this is Taylor from thetradinganalyst.com. Thanks for stopping by. We're going to take a look at the S&P 500 chart here. We're going to do a top-down report here looking at the daily chart, then I'll look at the hourly chart, and I'll look at the 15-minute chart as well so we can get a full view, a full picture of what we're looking at in the market here. If you're not already a member, go ahead and give us a shot. We've got a free 7-day trial, live chat room, real-time option alerts, market education, daily market watch list, and actionable alerts every single day. So here we go with the S&P 500. A couple things that I'm seeing here. We've got the August lows and the September lows that are holding so far. Okay, we're bouncing from here. We've got this double bottom right here. Okay, so we are finding some support right there currently. Okay, now we have a couple of gaps up here to fill. There's a gap up here from the close of this candle, and that is at 198.82, so right around 199, and then another gap right around 201.50, and another gap up here at about 204. Okay, so that's what we're looking at on the gaps. This I would consider a breakaway gap right here, so not sure that that fills, but I think it's a decent possibility, decent odds that these gaps fill here. But it's not going to be easy, and we need to hold these lows right here in order for that to happen. Okay, so far we're not exactly, dying down here. Okay, we're kind of just hanging out in this range. It definitely looks more bearish than bullish, but again, it looks to me like it could be forming a bottom down here. Okay, but we certainly have much more work to do. So far, we've just gotten a bounce from this level, but again, today we made a lower low and a lower high compared to yesterday's candle, and we closed as an inside day on yesterday's action. Okay, so to me, yesterday's action should not be ignored. Okay, so and today is not some insane bullish today, because it can just be considered short covering. Okay, we did not break above, and I'll switch to the well, actually, one more thing I want to mention is this, like 192.50. That's going to be a key level to see if we can close above 192.50 or so. As you can see, that was the close of this candle, the close of this candle right there. So we want to see a close above this small little resistance in order to get a little more confident that we may have reached a bottom down here. Okay, so far it's looking okay, but again, I'll show you the hourly chart here. Okay, so the hourly chart, actually, really quick, I'm going to jump to the 15-minute chart. Okay, so as you can see here, I did the Fibonacci retracement levels from, this is yesterday's high to today's low down here, and we were rejected right near the 61.8% Fibonacci retracement level. Okay, so we've definitely got some work to do before really considering that we've found some kind of bottom down here. Okay, so far we've just kind of retraced back from yesterday's move, but we haven't really broken through those levels yet. Okay, so I'll switch back to the hourly chart here. Okay, so we've got this downtrend line that started late, just the last couple days of 2015 here. We've got a touch here, here. That's 3 touches, so it's a valid trend line here. And that's matching up perfectly right around 194, which, as you can see, that's where we got rejected here yesterday. and the day before that we got rejected there. And as you can see here, this was a level of support. A lot of candles were hanging out in that range, and then we finally broke through that range with this candle right here, and that saw some decline from there. Okay, so that this level is definitely an important level. And I also have this line drawn, okay, because that was the little bear flag breakdown that we had as well. So we're below this line, we're below the downtrend line, and we're below this 194 resistance. So if we can break over this downtrend line, then I think we can really start getting more comfortable that we've found somewhat of a short-term bottom at the moment. We're pretty oversold down here. A lot of individual names are getting oversold. A lot of the breadth charts, NYMO is at an extreme oversold condition. So, we can reset those oversold conditions with time or by price. So what I mean by that is if it's by time, then we can just kind of be trading around in a range down here and form a bigger bear flag and kind of trade between 194 and 188 or so for a while and get out of those quote unquote oversold conditions and then continue downward. Okay, I'm not saying that's what's going to happen. I'm just saying that these are some possibilities that you need to be aware of. Okay. So again, I want to see a break over this 194. I want to see it close above these levels on the hourly chart to really get comfortable with this bottom. We don't really have any kind of an uptrend, even on the hourly chart, to go off of, okay? This was a little bit of an uptrend line here forming, and then we broke below that, okay? So we actually were looking for some call. We actually got into some calls the other day right here, and we were stopped out as it broke below that trend line. Okay, so we're going to be looking for some other trend lines to trade off of. So far, we don't have any new uptrend lines to go off of. It'll look something like this. Probably the same angle, and that'll match up with about 190 if we can get a bounce from there. I'll go into the 15-minute chart and I'll show you some possible bounce levels. All right, so we have this Fibonacci retracement level from the highs over here to over here. Okay, so I'm going to delete that, and I'll do the Fibonacci retracements from the lows here to the highs here, right there, okay, from these highs of today, from the lows down here. And that matches up really well with some support. The 61.8% Fibonacci is right at 190, okay, 189 to 189.85 to be exact, but let's just call it 190 to make it easy. And we have, that's where we bounce from over here, okay? And as you can see, that was the highs of a lot of candles up here. We've got a lot of touches, okay? A lot of touches in this range, and also continuing to the right. As you can see, it dropped back down and it bounced off of, and it bounced off of that level as well. Okay, so definitely we can see the potential here to be bottoming right there. So we can draw an uptrend line that'll look like that, about that range. Of course, you can't really draw this uptrend line with much confidence because we only have one touch here. So this is basically just a guess here based off of the support and the Fibonacci retracement level. Okay, so if we're going to bounce tomorrow, or if we consolidate and then bounce, it's going to be from this 190 area. So that's a level that I'm interested in and that I'll be watching tomorrow for a play. Okay. But again, we've got a lot of work to do. We don't have an uptrend line yet to play off of. We don't have much to work with. We only retraced back 61.8% of yesterday's move, and then we dropped back down, okay? And we made a lower low and a lower high, okay? So just keep these things in mind. Remember that bottoms take sometimes a while to form. They don't, this isn't some raging bull market where we have V bottoms anymore. So you just kind of have to be aware of the current market conditions. Overall, the market in the long run definitely looks like it's coming down, like we'll be heading into some bear market territory. But again, that doesn't mean we can't get, short-term bounces, in the meantime. Okay, so just kind of be aware of the market we're in. What's the market doing? We're making lower lows. We're making lower highs. Until that changes, I'm a very skeptical bottom caller at this current juncture. Okay, guys, thanks for watching. Again, you can join us for a free 7-day trial. You can share this video with your friends. Hopefully you liked it. We'll see you next time.